Namaste, Namaskara. Good evening, everyone. I would like to take this wonderful opportunity to welcome you all to ETMarkets Emerging Investment Opportunities event presented by Mudrex. Ladies and gentlemen, as India steps into the exciting new era of immense potential, we are thrilled to be here with all of you, the investors, who will shape the nation's financial future. India's Amrit Kaal ushers in a transformative period, not just for the country, but for investors like yourselves. As per data released by NSE, a record number of 16 million new investors were added in India. Yes, 16 million new users were added in 2023 alone, clearly indicating promising times for the entire investment ecosystem in the country. This event is designed to be your springboard as you navigate the exciting world of new and emerging investment options. We all know the traditional roots of stocks and equity, but what about the exciting frontiers of cryptocurrency, real estate, and the redefined world of bonds and FDs? This evening, we will delve into the burgeoning investment categories, providing valuable insights to help you make informed decisions. As you, a seasoned investor, looking to diversify your portfolio, or perhaps you are a newcomer eager to embark on your investment journey, we welcome everyone. This event is packed with knowledge and tools you need regardless of your experience level. So ladies and gentlemen, I must say that this event is presented in partnership with Mudrex. Once again, a warm welcome to all our esteemed speakers and our audience. Let's begin this insightful, interesting, and informative event with a huge and generous round of applause. ಜೋರಾಗಿನ ಚಪ್ಪಾಳೆ ಒಂದಿಗೆ ಕಾರ್ಯಕ್ರಮನ ಪ್ರಾರಂಭಿಸೋಣ. Thank you. To kickstart the evening, may I request Mr. Kshitij Anand, editor ETMarkets, to set the context for the evening. Put your hands together while I welcome Kshitij to the stage. A very, very warm welcome to you, sir.
Thanks, Anita, for the lovely introduction. Well, good evening, ladies and gentlemen, distinguished guests. Welcome to ETMarkets, Emerging Investment Opportunities, powered by Mudrex. Now, in the dynamic world of investment, seeing opportunities beyond traditional equities require, a keen eye as well as strategic foresight. Now, this is Amrit Kaal for investors, and definitely the right place and the right time to diversify and look beyond equities if you are looking to boost your portfolio. Now, my name is Kshitij Anand again, and let's delve into the realm of Amrit Kaal, the timeless era where investors explore avenues beyond stocks. Now, we'll be discussing from bonds to fixed deposit, cryptocurrencies to REITs, and as we uncover basically the hidden gems and unconventional strategies that can redefine your portfolio in 2024 as well as beyond. Thank you so much for that. Over to you, Anita, on that.
Stay back on stage. With that, we're all good to start the first session of the evening, which will help you navigate the bond market like a seasoned professional, discover how to identify the right bonds for your unique investment objectives, also understand the crucial variables involved in risk management, and explore the lucrative opportunities offered by bonds. To navigate this conversation, we have Kshitij on stage, and to decipher this category, who better than Mr. Ajinkya Kulkarni, co-founder and CEO, Wind Wealth. Put your hands together. Let's welcome Mr. Ajinkya Kulkarni to the stage. A very, very warm welcome to you. I will request both of you. Over to you, sir.
Hi. Thanks, Anita.
Okay, before I hand over the stage to you, after this session, which is going to promise very informative session, okay, for sure we will have questions. So be ready with questions. We'll open the floor for the question. All right, over to you.
Thank you, Anita, and welcome, Ajinkya.
Thank you.
Let's start off the conversation. To begin with, if assuming everyone is new to this asset class, so bonds are debt instruments that belong to the fixed income asset class. And in fact, I was going through the website, and Wind Wealth has options of over 17,000 bonds in India across 14 categories. and that is quite a lot of or quite a bit of options that you're giving it to the investors. So, but the big question in front of most investors and most people is, most of us don't know the asset class much, and is it the asset class catching up at this point in time? No, why I say that is because initially or traditionally, uh, investors were aware that bonds are there, but then again, there was not you could say a centralized authority wherein or centralized place wherein people can go ahead and make that purchase to make it, जैसे हम कहते हैं कि ease of doing business. So that was not there, but I think with these options, this has come along. Over to you, Ajinkya, on that.
Yeah. So we have listed, on our website, we basically have dictionary of bonds. So saying what are available in the market, which are about 17,000.
Right.
But like we are at our online platform, Wintwealth, we are basically focused on retail investors. So we don't think most of these 17,000 are relevant, right?
No, absolutely.
At any point of time, we have about 7-8 bonds that we sell because we think those are relevant, right? I just wanted to clarify saying
Sure.
we don't think that most of them are relevant for retail investors. Maybe for HNIs they are relevant.
Absolutely. Right? But definitely the option is there. If in case HNI would want to invest via the category, they can do that.
Yeah. Those are available. I mean, we don't sell them. So it is available on all.
Yes, absolutely.
If whatever broker you have, you can go and buy them. Right? I think bond as category was always there. It never picked up for a bunch of reasons. I think the key factor was all of these bonds were issued in private market.
Right.
The ticket sizes were higher. About 2 years back, in listed bonds, majority of bonds were listed at a face value of 10 lakh rupees, which is completely out of reach of retail investor. 1.5 years back, the ticket size is reduced to 1 lakh, and now SEBI has come up with a consultation paper saying they'll reduce it to they are proposing to reduce it to 10,000. So that's when it became a retailish product. So we are seeing a lot of regulatory push towards it to make bonds attractive, at least viable, forget attractive, right? Another thing that has happened great is in last March, you saw the indexation benefit on debt mutual fund going away. So that was a major, major kind of pro or reason to invest in a credit in a debt mutual fund, because without even taking risk, if you had invested probably in a GSEC, the interest yield will be post-tax will be same as a bond with probably a A rating, right? Now that is gone, so suddenly that is up. Bonds have become attractive. In a bond, when you invest in a bond, you have to invest in probably 10-20 bonds. You cannot take a concentrated exposure. So therefore, ticket size has to be low. So if let's say if today's ticket size is 1 lakh, and if you have to invest in 10-20 bonds, that means you have to invest 10-20 lakhs of capital in bonds. That means you would generally have an asset above 50 lakh and above, right? Asset like your own net worth or liquid net worth investing.
Absolutely. And, like you're saying that because of the regulators push now, even the smaller retail investors could also take exposure. At least they have that kind of comfort level to take exposure in this particular asset class. Now, for the benefit of investors, if you could just quickly go through what are the different types of bonds available in the Indian markets and how do they vary in terms of the issuer, tenure, as well as the risk profile?
So majorly, I look at it 3 categories. One is by government, G6, you call them government bonds basically. Short tenure are T-bills. These are government issued and these are really safe bonds. AAA rated, so probably the safest bonds, right? Then second category we see is by various SDL bonds, what we call it, or municipal bonds. Their perceived value is safe, but we have seen defaults there.
Right.
And unfortunately, when a government entity defaults, you can't really do anything, right?
Yes.
Other than waiting, right? Because they cannot shut, you cannot go after their business or take over something, right? Unlike private. So, and we've seen a lot of these bonds getting sold through offline channels advisors on a basis that, okay, these are government backed, but often these, not very, very often, but these bonds have defaulted, right? And there is a perception that these bonds cannot default.
Absolutely.
That's true for G6, but not for Government of India won't default because
No, government of India can't default because otherwise it will have a whole new
Yeah,
meaning,
yeah,
not
but-
just for India but for the world.
yeah, but state development bonds
Huh.
and municipal bonds have defaulted.
They have default. Okay.
Uh,
Okay.
Right, and especially some of their subsidiaries where they have acted, they have given corporate guarantees. Also, they have not honored those guarantees.
Okay.
There have been cases of that.
Right.
Now, third is a major category is basically corporate bonds, bonds issued by private limited companies. In there also, there are clearly two separate categories. One are bonds issued by NBFCs, non-banking financial companies, and other are non-NBFC corporates, right? So who basically want to probably need bond for working capital or infra capex, etc. If you look at NBFC bonds, they will constitute about 80% in terms of volume, because for NBFCs, money is like a raw material, right? So they borrow money, they lend, then they lend that money, and then they make that spread, net income spread, net interest spread, right? Margin, and that's how they grow, right? That's how they make money, right? So these are three, four categories if you look at from a issuer standpoint, right? Obviously, then there are tenure wise, right? Right from you'll find CPs which are short tenure, which are probably 3 months, 6 months, then right up to 30-year bond. Also, Government of India you would see, right? So that's on the tenure side,
Right.
and obviously risk comes in. That is somewhere indicated by rating, but rating is not a foolproof mechanism, and we can discuss that.
Sure.
Rating is another area how so there are basically three: who is issuing, at what tenure, what interest, what is the risk basically.
Absolutely. And I think because of all these variables that we have in place, or all these touch points that we have in place, investors can also sort of put that in their portfolio and depending on the goals. So in
Yes.
case, so we'll definitely come to the portfolio construction part as well. But in the meantime, in terms of factors that really impact the bonds are interest rates. So if you can also explain, take us through that process as well. If RBI, decides to cut down on the interest rates, which everybody is probably, hoping so far that might happen, that might not happen. But, given the fact that Bank of Japan has raised interest rates at this point in time, so yeah, there's another fear in the market. But taking that conversation aside for a different time, but how interest rates are impacting the bond market at that point?
Sure. I will I'll give a very small example, a very
Absolutely.
simple example, right? Let's say you invest in a bond that gives you 9% return, has a tenure of, let's say 10 years. You buy that bond and next day interest rates fall by 1%, right? Now, so somebody buying that, if the issuer, let's say, and for very simple purpose, let's say Government of India is issuing this. Now from next day, Government of India is going to give 8% yield to that bond, right? So if you were to sell that bond, you will say ki I am getting 9%. So I will sell that bond at a higher percent, so that the buyer will get probably 8.1%, right? So that buyer is happy, because instead of 8, the same risk is getting 8.1, right? So the bond price increases by 0.9 into 10 years, and you discount that cash flow. Obviously, there are a bunch of factors.
Right.
So if interest rates fall, bond prices increase. Right. Similarly, if interest rate increase, bond prices fall. Yeah. Right. So it is as simple as that. But generally, when especially, what we've seen, bond market is at very nascent stage today. Sure. We haven't seen people trading bonds and playing on interest rate, especially the retail investors.
Unlike what we have in developed markets or US, which has a...
I'm not really aware of what happens, so I'll not comment on it. But if you look at equity, you have huge number of people doing FNO.
Absolutely.
Right? Or taking, short-term view, saying this stock will go here 3 months, 6 months. But in bonds, we haven't seen that. In bonds, people are primary moving, saying, okay, I'm okay with probably taking more risk. So I can buy this bond. This suits my needs. So it's mainly hold till maturity, right? Where I'm taking that bond and trying to hold it till maturity, while I want an option to sell it in case I need money, right? But there hasn't been a lot of liquid bonds, especially bonds that are attractive for retail investors. Sure. And I'll explain that how. So if you see, GSEC is about 7%, right? And in AAA, AA category will be about 7-8%, right? If you look at small finance bank FDs today, we also sell FDs, right? They're giving 8.5-9%. Exactly. Now, if you're HNI putting in 1 crore, you cannot depend on a small finance bank because
Absolutely.
up to 5 lakh only it is guaranteed by government. But if you're a retail investor, you might as well simply invest in a small finance bank FD at 8.5%, 9% rate, and just get done because you don't have headache of understanding this MTM losses, liquidity, right? You simply go, if you need money, go to bank, they'll charge 1% penalty, give your money, and you move out and you are
More liquid option that's actually.
100% guaranteed liquidity, right, with FD, and it is backed by government of India, right? So that's where it comes in. So unless you have to deploy really high capital, these safe bonds, even G6 for that matter, or AAA rated bond, won't make much sense. Uh, Now, this what makes sense for retail investors is if they're getting probably 2-3% higher than FD return. So if a bond is giving, let's say, 10.5, 11.5% return, that's where it becomes interesting. And those are the kind of bonds we bring on Win12 platform. So these are generally A-rated. We vet them. So there is we believe there is some arbitrage there saying, the interest is high, but in our opinion, the risk is not high. Right, and those are bonds that are attractive for retail
but you
investor.
also
and
have some
HNI.
intelligent information going in the onto the product profile that you have. And you're saying that you're also giving some sort of comments on that research, or you could say so intelligent information.
Yeah. So we do our due diligence, and what we also do is we generally co-invest and we hold 2% of the bond issue. So if we bring a 30 crore bond, we will generally keep 2% on our books and hold till maturity. So we have skin in the game. So it's not like we are selling anything and just making money, right? So how we do our diligence is we basically sell only NBFC bonds. So we know that segment far well, right? Second, we originate the bonds in most of the cases. So we define terms and conditions. We monitor these NBFCs on regular basis, and fortunately, we've seen zero defaults till now in last 4 years on the platform. Right. Yes. So it does require a lot of research. Like if you are going into a stock, equity stock, and like taking exposure, you will require a lot of research. So similar in bonds, you require a lot of research. In bonds, you also have to look at corporate governance, right? Obviously in equity also, but in bond it is far more important because you are giving debt where the upside is not unlimited, but downside is kind of you can potentially lose 100.
We're not going to get capital gains in bonds, so yes, we are only dependent on the coupon. Interest.
Yes, so we do a lot of groundwork also to figure out corporate governance. So yes, so it is intelligence also and a lot of groundwork that happens also before we bring a bond on Win12 platform.
Right. In fact, these are the steps in the right direction to make sure that we are guarding the investor's interest at any point in time. Now, just an extension of what we are discussing right now is, let's say somebody has purchased the bonds, and we just touched upon this point. So, what are the tax implications? Probably we are in the month of March, right? And that's where the financial year is ending. Now, any investment product somebody has to take will be for the next financial year. How should one be looking at the taxation part of it? And the time horizon, yeah.
Bonds are taxed at your your marginal rate basically. So if you're in 30%, you'll be taxed 30%, 20. TDS is cut 10%.
Right.
Yeah.
So and that is held till maturity?
Yes, on whatever, like on the interest you get actually.
On the interest, okay.
Yeah. The gains that are in bond, the gains are taxed at 10%, but let's say if a bond is 100 rupees and because interest is due of 1 rupees, therefore bond is selling at 101, then it's not a capital gain. Capital gain is only when interest rate moved, therefore bond price moved. Right. In fact, there have been tries of figuring out better taxable instrument in fixed income. One of the very famous or well-picked instrument was MLDs, and which got quite famous in HNIs and family offices. Is basically the return is theoretically tagged to a index like Nifty or Sensex, but practically it was a fixed income instrument, and it used to get taxed at, let's say, 10%, but government struck it down, right? But there have been a lot of innovations happening by the MLD side, just from a tax perspective. Like, let me give you an example. I saw one issuer issuing a bond, which which basically says, okay, you invest in this bond. In next 2 years, when the bond matures, you will get 1.5x return of Nifty with zero downside. Now the risk is on the insurer. So if issuer is repay, that's primary condition one. So you are taking risk with the issuer. But if issuer is able to repay, if the Nifty has moved, let's say 20%, you will get 30% return.
Right.
But if the Nifty has gone down 20%, you will still get the capital back.
Okay. Okay.
Right? So and then I asked the issuer, why did you do 1.5? Because that if one were to invest in equity, taxation is 10%. Now with 1.5, even if the taxation is 30-40%, the post-tax return matches with Nifty. So with a zero downside, you are getting that return. Obviously, you are signing up for the credit risk.
Absolutely,
So
yes.
there have been innovations on that, but generally, I think there is hardly anything left that is tax efficient in fixed income at least.
Right. No, in fact, it's a very good, at least we are working towards there. We're trying to work with the hybrid type of instrument. I think this will be more of a hybrid instrument where equity and fixed income both combined and making a product.
Yes.
So do you think that next era will be of hybrid instruments and not a traditional form of an instrument?
No, like I don't think these are like really.
No, probably this is just the start. And as we move along, probably in the next 5 years, I'm just talking about a
Yeah.
longer term perspective.
I don't think hybrid as such. I'm very bullish on bonds because government wants it, and
Absolutely.
if you really have to become a large economy, your corporates have to have like ability to raise capital from debt market to fuel growth, and simultaneously your investors need to have access to, like you really need a deep capital market. That's really important for a very strong economy, right? So RBI is pushing towards it, SEBI is pushing towards it, Government of India wants it to work. So we do think that this will become big. Hybrid obviously will become part of it. Bonds obviously will be the major beneficiary.
Absolutely. Now that we are in the portfolio construction space, let's say someone who is in the age bracket of 30, 40 kind of a years, what is the kind of ideal percentage which one should be looking at parking in the fixed income market?
So there are 2-3, like rather than giving just one number, there is one basically very simple formula saying your age is what you should have in.
Right. But that formula was made, I think, some decades back when we didn't have that kind of options. But now that investors have different options, I think we could probably take a tweak.
I think that formula was not even applicable in India 5 decades back because you hadn't had an equity market, right? That's
Exactly.
as
Right.
an asset class.
When it was made, I'm sure at that point in time.
I think a better way to look at thing is how. Let me give my own example, right? If I need
Sure.
something in 6 months, then it's an emergency fund. If I don't need money for next 10 years, then it's definitely equities, right? Right, and then beyond if I need that money, and I have a specific time period, let's say I want to buy a car or something, buy a house or make down payment, then it has to be in fixed income. Probably when it is 1 to 3 years, I can look at bonds or FDs, right? This is very basic approach. Now I should think that, okay, if equity falls tomorrow by 30-40%, can I hold that, right? So if I don't need that money, I can probably hold and it will recover on its own. And especially the fundamental assumption here is I am bullish on Indian economy, right? Not in short term, but in long term, right? So then I can put it then in equity, and whatever I want that cushion for, that I can create through debt. So, and that could vary for different people differently, right? But you should be okay if the market falls 30-40%, and you should not have to withdraw that equity corpus, because the only thing that you can hurt is by compounding, and especially when it is at low, right? So you don't want to do that. So you want to create cushion outside it. So you will become wealthy through equities only, but only if you don't interfere in it, right?
So staying put.
Yes.
Right.
But if you need money, you'll have to withdraw, right? So you need to have cushions created.
Right. So for a short term, maybe for a year or 2 years, if someone is for the immediate goals, that's what you're saying.
Yeah. Not immediate. I mean, even if 3 years, right? I don't call it. I don't know whether you call it immediate. But if you know that you are going to need
No,
money
absolutely.
in 3 years, then
Because equities, you said 10 years, nah?
yes, it's not in 10 years. I mean, I will be very worried if I need that money exactly after 3 years. When I say 10 years, that means I don't need that today for sure.
Absolutely.
Or I don't know the purpose of it. It is going to create wealth.
Right. No, absolutely. Because then we are depending more on the capital appreciation part.
Yes.
We are counting on that, right? Because bonds will anyways give us a steady stream of inflow so that we can plan for our immediate goals and then move forward, right? Now, also in terms of, we talked about different types of bonds. We've also talked about, the taxation aspect. But let's also focus on, what are the risks that the bonds carries. Obviously, you've touched upon few of the default that has come across. But anything that you want to specify in specific?
So generally there are 4 risks. One is credit risk, second is liquidity risk, third is fraud risk, and fourth is market risk, right? So credit risk is money being lost, right? So let's say something bad happens and the company shuts down and not able to pay. So that's a credit risk. Liquidity risk is the bond has a maturity of 2 years. You need money in 1 year.
Right.
You can only sell it if there is a buyer. So there is a liquidity risk.
Right.
Third is fraud risk, basically promoters especially defrauding the company. So it will end up in credit risk, but we look at it very separately because it's a corporate governance risk basically. And fourth is market risk in case interest rate changes, the bond prices change. That I think is still minor. And in good debt products, what you have seen is these risks are not zero, but they are mitigated well. If something that sort of happens, there is some covenant, some mechanism to make sure that money comes back. Right? Like, for example, we only do senior secured bonds on our platform, which are backed by portfolio of loans, and we have capacity, on-ground capacity to go and recover those loans. So if the NBFC goes belly up, bankrupt, then we can go and recover that money, and it's generally 1.2x. So if you given the NBFC about 100 rupees, then we have loans worth 120 rupees, and that we keep checking that on monthly basis, right? So that's how you mitigate credit risk, right? Like for fraud risk, we do a lot of due diligence on the promoter, what is promoter background, lot of market intel, whether books are cooked, is there evergreening happening in the portfolio. So that's how you mitigate fraud risk, right? So that's how risks are mitigated. In a good product, the risks are always there. They're mitigated well.
Right. Now, in fact, on the website, you also mentioned that you have bonds from experts or recommendation from experts. So are these the intelligent information that you're providing, or this is a separate thing, because this will help investors to sort of pick from the best?
Yeah, so we do provide that information on the platform. We do also webinars. And the biggest proof there is we co-invest, right?
Right, absolutely.
There cannot be anything better than that.
The skin in the game that you're talking about, right? All right. You want to add something on that? How's the process? What are the things that you really, in your checklist? What are the things that are there in the checklist, so on and so forth?
There are a bunch of them. So it just generally takes us about 6 to 8 weeks to basically finalize one bond and bring it on a platform.
6 to 8 weeks. That means that means 2 months round run.
Yeah, exactly.
Okay.
Because it starts with saying, is this NBFC good? So we'll first gather market intelligence. Is the rates attractive for the risk that it is going to carry? Then we actually visit the NBFC headquarters, go through their LMS, LOS, their systems, how they underwrite.
Okay.
Right? Then we randomly pick out some loans, visit branches, right? Understand whether those processes are followed, which randomly check loans there. Then we randomly visit borrowers. Then we have third-party random audits saying, does the branch really exist?
Right.
What if I go in as a borrower? Are they asking me right detail? Are they following the credit policy? Right. Then we will collect a lot of market intelligence from other lenders, right? Who has lent to them at what price? Who are their equity investors? Do they have ability to pump in money if there is a crisis? Right. Who are their auditors? What is the corporate governance? What is the promoter history? Where was the promoter before this? What are his credentials? We run.
We have, let's say, off with the conversation, you said that government is working towards it to making sure that it's more affordable. So what should be the ideal ticket size right now, and how do you see the future? Ticket size could be for initial investments.
I think it is coming down, right? And generally, if anybody is delving into asset class, we generally tell them that no asset class is going to run away in 1 year. If it is going to run away, you better not participate in it. Right?
Right.
So just start small, because whatever you read, talk, everything, you ultimately gain experience of asset class by investing in it. So start small, and so in my opinion, if you have a portfolio less than 50 lakh, 1 lakh still doesn't make sense. So 10,000 is a great way to start,
Right.
and then you understand more. Probably in 6-12 months
then
you start
build
doubling.
on.
Yeah, you build on.
Okay. So is there a golden phrase for bonds as well? For equities, you have buy on dip, sell high.
I don't think so. There is probably we should invent one.
Right. Well, on that note, I'll open the floor for questions. Anyone would want to ask Ajinkya, right? Any particular questions you have for Ajinkya? All right. We have a gentleman here.
Yeah, right there.
At the back.
Mike, please. So raise your hand there.
Good evening. A layman's question. Okay.
Sir, I would request you to introduce yourself and.
Okay. I am Balachandra, retired Dean of Ramaya Institute of Management Studies. Very, very layman's question. Okay, small-time traders and that we are. And you said there are underwriters to the bond. Okay. Now, what is the risk that they undertake to safeguard the investor's interest?
I don't there are no formal underwriters, so we do due diligence before bringing the bond, right? And we co-invest. So I don't in case of, let's say, equity IPO, there is generally underwriter, right? But I don't think in case of debt there is underwriter, right? So.
But then you were mentioning about the bonds, there are underwriters, right?
No. There is no formal system of underwriters in bonds. Generally, we think whatever we tell is, you should ask what are the incentives of this person, right? So.
Okay, go by the credibility of the person.
Yeah. So in our case, we thought the best way to prove our incentives is to keep them aligned, right, with investors. So we co-invest. We are generally the largest investor, and we hold that till maturity.
So we go by what you do.
Yes, in at least that. So because if I'm introducing a new asset class to you, whatever I'm going to tell you, I'm pretty sure it is not going to be received exactly 100%, right? Some will understand 80%, some will understand 50%. And the best we can do the least we can do is make sure that our interests are also aligned, right? Because today I'm running that business, but as we grow, I'm approving every bond that comes on the platform. But as our team grows, a bunch of people who will come. The way to make this really functional for long term, make sure our incentives are aligned, right? But oftentimes it's very hard to find incentives. But I think that is the best way, right? Even in equity IPOs, there are underwriters.
Exactly.
There are short-term underwriters, right? You don't know their business dynamics, how much they're probably gaining for underwriting that issue, and how does their business. So it is often hard, but the best way to find out is incentives, is my opinion.
Okay, thank you.
My name is Narayan Bhatt. I had a 30-year bond, but in 30 years the value of the money is going to depreciate substantially. So what is the incentive for buying a 30-year bond?
Yeah, actually there is no incentive. If you are investing in a 30-year bond, it would generally be a government bond, right? And so you are not taking any risk. So generally, if you are not taking any risk, the real real purchasing power of that money will go down, right? And you should be okay with it because you're not taking any risk, right? So you should only invest for 30-year in bond where because you don't want the volatility or like uncertainty of equities. And that's great for senior citizens, right? And they should be okay rather than betting the whole capital in equity market that the value purchasing power is slowly decreasing. It is not going to go to zero, right? It's probably, let's say, post interest, if you are getting, let's say, in a government bond 7%, so you are getting 5%, so and inflation is 6%, so every year you are losing 1%. It's still not bad because the return is guaranteed, right? But if you want to beat inflation, then you have to go to bonds that have higher, higher interest and higher risk, therefore. But that is also for short term, for 3-4 years. If you want to probably, if you are looking at 15-20 year horizon, I think equity is much better, especially in India. And that's my personal view, to beat inflation and create wealth safely.
Right. Any more questions that we have?
We'll take last one question. For sure, if we have more questions, we'll take at the networking dinner. We'll just
Sure,
take last one
absolutely.
question.
I think we'll take one more.
Yeah,
Sure.
my name is Girish. So these bonds have a rating, right? So what is the agency that rates these bonds?
Yeah, so these are basically SEBI approved agencies. We have about 6-7, right? CRISIL, ICRA, India Ratings, CARE, etc. What we think is that rating is not a great indicator. Primarily, like I'll explain this shortly, like rating basically talks about probability of default and not probability of loss. So it basically tells you on the maturity rate where the issuer will pay or you or not. It doesn't tell you that if issuer is not able to pay, what will happen to the money? What is the probability of you recovering that money? So for example, if a AAA rated entity issues unsecured bond, it's still rated AAA. And let's say BBB rated entity issues a senior secured bond, which is really backed by, it's even bank guarantee. It is still rated BBB, right? Now the thing, or let's say pool of loans, right? Now the thing is, on a maturity date, AAA rated entity defaulting, the probability is really low. But if it defaults, because it's unsecured bond, you'll hardly recover any money, and that we have seen previously, right? But in this BBB rated entity, if you're really good underlying collateral, you can sell that collateral and recover money, right? So rating basically tells you probability of default and not probability of loss. So when you invest in bond, you have to look a lot beyond ratings.
And is there a relation between the rate and the
Yes.
rate of interest as well, I believe, right?
Yes.
It shows usually more.
Yeah,
the
there
low
is
rating.
always a correlation between the rating and borrowing rate, interest rate.
All right, for that highly insightful session, put your hands together. Let's say thank you to Mr. Ajinkya Kulkarni and Mr. Kshitij Anand. Thanks to both of you. Please take your seats. For sure, if you have more questions, Mr. Ajinkya is here for the networking dinner. You can walk up to him and ask your questions one-on-one. On that note, we'll move on to the important topic of the event, cryptocurrency. Yes. Cryptocurrency is poised for significant growth in India, presenting promising prospect for investors seeking exposure to this rapidly growing new age investment option. To help you make sense of crypto, we have Mr. Edil Patel, co-founder and CEO, Mudrex, to come on stage. Put your hands together. Let's welcome him on stage. Over to you, sir.
Thank you. Yeah, great. Firstly, thanks a lot everyone for being here this evening. I hope this event will be very insightful and helpful for everyone. Today I just wanted to spend some time answering 3 of the most common questions that I have received from all our users over the last 5-6 years now. Is Bitcoin legal? How much should I invest? And how do I participate in this ecosystem? The entire asset class keeps on moving fairly quickly, and things keep on changing not only in the country and across the world, but also they keep on changing from a technology perspective. They keep on changing from the perspective of who is investing, how are they investing, and how is the asset class growing. So I just wanted to take some time today talking about this in the event. Just a quick introduction. I am Edil Patel. I'm the co-founder and CEO of Mudrex. Mudrex has been a company that's been out here in the crypto space for the last 6.5 years. We're a registered virtual asset service provider in India as well as in EU. We offer our services to close to 1.5 million users world over, a lot of them being in India. On that note, let's get started. Great. So question one, is Bitcoin legal in India, right? Like the first, सबसे basic question, the question that my mom asks me almost every other month or so. We'll get to the answer, but let's first quickly go through a bunch of things as well, right? So this is a statement from the India strategy paper by Niti Aayog that was launched a few years ago. It says seamless transactions that promote the ease of doing business as well as ease of living for citizens via disintermediation and the reduction of ad hoc bureaucracy is the true promise of blockchain technology. Like the Niti Aayog has been saying for a really long time that this thing called as the blockchain technology is going to be a part of our day-to-day activities as well, right? Fast forward today, talking about today, crypto adoption in India is growing. India actually tops the list world over from a grassroots adoption perspective. The overall India crypto retail space is about $6.5 billion. That's where the amount of investments are coming in. The crypto tech market, which means that people who are participating in the blockchain technology, creating products and services, is about 250 million, is expected to get to about 250 million. That's growing very rapidly. And all of this, along with a thriving smartphone ecosystem, internet access, and the services economy growing and serving more and more and more products outside the country, is growing this economy very rapidly. But we'll keep adoption at the side. Let's talk a bit about regulatory clarity, right? So from a regulatory clarity perspective, crypto is now included in the PMLA framework. The PMLA framework is roughly the same thing that all banks, all payment gateway providers, basically all financial institutions that are registered and working with the Ministry of Finance need to follow. It's a framework that is mandated to make sure that there is no money laundering, there is a tracking and so on and so forth of transactions that's happening. And all of this is also applicable to crypto companies now. So crypto companies are effectively, from a transaction monitoring perspective, need to follow the same set of compliances that banks do. There are 40 odd businesses that are doing this in India. Mudrex is one of them. Then on the regulatory side, another interesting that has happened over the last few years is that there has been a lot of work happening globally. So all of you would have heard about India leading the G20 presidency, right? And a large kind of sort of initiative under the G20 presidency for India was to talk about crypto, get this consensus about crypto going, and get those conversations moving on the regulatory front. And then, of course, there have been a lot of adoption of crypto and blockchain on a day-to-day basis, right? For example, all of us use DigiYatra. I'm pretty sure most of us who've flown use DigiYatra. That's built on top of blockchain. There are a bunch of other things that are being built on top of blockchain, including voter registries, education certificates, and so on and so forth, right? So regulatory clarity is at its most clear that it has ever been. We don't have a regulator yet, but we've got a registration entity. There is a clear process. There is monitoring of transactions and so on and so forth. All of that is in place, right? Then the next part, apart from regulatory, that comes in is always taxation. Fortunately, we also have a very clear framework on tax now in crypto. It's been around for about 2 years now. This is the second cycle of tax that's coming in where people who have crypto or own crypto will be paying taxes. And this has happened fairly rapidly. Like, I'm not sure if, I'm pretty sure you guys don't know it, but I know it because I've been in this space for the last 6 years. 4 years ago, there was a discussion paper that said that anyone holding crypto would go to 10-year jail. And we've gone from a 10-year jail to basically 30% tax now. And that, the rate at which it has progressed is actually, it surprised me quite a few times. The crypto taxation today is actually very straightforward. We've got a 30% tax on profit from crypto trades. We've got a 1% TDS that everyone pays whenever they are doing a fiat to crypto transaction. And the main part that's slightly worrying is that profits from digital assets can't be offsetted against losses. But we'll talk about this in the future as well, right? So we basically have crypto adoption growing. We've got regulatory clarity that's very clear. And we've got a very clear tax framework, right? So the answer is that Bitcoin buying, selling, transferring, holding is completely legal in India. It's widely accepted in India, and it's growing at a fairly rapid pace, right? So that's like a very quick answer to question one, right? Typically after that, the second question is, should I even buy Bitcoin? Like, okay, if I do, how much should I buy? What should it be a part of my portfolio? And we thought that instead of, we should spend some time going slightly deeper, doing some analysis of Bitcoin over the last few years itself, right? So let's take that. I'll use Bitcoin and crypto slightly interchangeably. Anyways, Bitcoin is a vast majority of crypto. So let's just talk about Bitcoin for now. So we all know Bitcoin is a high risk reward asset, but the risk, as you see, is reducing, right? And all of us typically measure risk with volatility. So you can see year over year, Bitcoin volatility has just continuously gone down. It's gone down to this place where it's now comparable with a lot of small cap stocks actually. So there's not a large difference between that. But what is also happening is that although this risk is reducing, the reward still continues to be high. So over here, what you see is something called as annualized risk to reward, measured by something called as a Sharpe ratio that a lot of portfolio managers use. It's just a measure of ki risk reward kitna hai, kisi bhi asset class ka. And you can compare three things, right? You can compare BTC, you can compare Nifty, and you can compare the S&P 500. And if you see, Bitcoin is a better risk reward product as compared to all of this. Having said that, yes, of course, it's very risky. So Bitcoin is risky. The second thing is that Bitcoin, like gold, is actually fairly uncorrelated with equities. And this is a great thing, right? Because as portfolio managers, a lot of you guys would know that the only free lunch we get in this world is investing in a basket of diversified uncorrelated assets, right? And if you look at like the correlation across these things, gold and Nifty, for example, are correlated at 0.03. Basically, there is no correlation. The same thing is actually also true for Bitcoin. Bitcoin and gold itself is also very uncorrelated, right? So having a uncorrelated asset in your portfolio helps you reduce the risk of the portfolio, or for that matter, helps you increase the return at the same level of risk. That's what I should say, right? And now, if this is true, then what we can actually do is we can try and create a kind of a portfolio. So let's say, if we added Bitcoin to an investment portfolio, how would that portfolio work, right? So I just wanted to give you guys some examples of it. So here is what we did. We compared two portfolios. One portfolio was something that had equity, debt, gold and cash. And in the second one, we replaced 10% of debt with Bitcoin to see how the returns would vary, right? And this green graph, you see, this is the returns, risk return profile for the portfolio with Bitcoin. This is the risk return profile for a portfolio without crypto. Effectively, if you look at it, the summary is here, down here as such. If you don't have BTC, you typically have about 8-9% returns in any given year. A Sharpe ratio of 2.42, basically a decent risk reward to it, right? But as you continue to slightly add more and more crypto, your returns go up, your risk reward actually also becomes better. And that's why ideally, typically we say that everyone should think of moving anywhere from 2 to 5% of their portfolio into crypto, more specifically Bitcoin. That's where like the golden number sits today, right? So yeah, so a quick answer to the second question, that Bitcoin has now emerged as a new asset class. It is very well suited for portfolio diversification. And what we've also seen is that this diversification effectively gives you the optimal level of this diversification is maybe just put in 2 to 5% of your portfolio. And actually, this is what has started to happen very recently with more and more institutions participating in the Bitcoin spot ETF that's coming in. And we'll talk quickly about the Bitcoin spot ETF also in a minute. Let's move on to question 3, right? This is, of course, the third question that I get most frequently, and off late started to get this much more from a lot of my family members as well. Is now the right time to invest in Bitcoin, right? My personal answer to this is it's always a good time to invest, but let's start looking at a few of the numbers as well. So firstly, a lot of you, I'm not sure if a lot of you are familiar with this, but Bitcoin historically has gone through these 3-4 cycles, right? There was the first cycle, which was very short, just a couple of years. Then the second cycle was about 3.5 years. And then these two are the third and the fourth cycle. This one was from 2015 to 18. This is from 18 to 22, the last cycle we saw, right? And as you can see, as every cycle has progressed, the peaks and the troughs continue to compress, which means that Bitcoin becomes more and more stable. And at the same time, the volatility also goes down. Now we are actually right now here in context to all the other cycles, right? So it's been running since some time. BTC recently saw a peak, and this is where we are. Typically, cycles go something like this. Hopefully, it just continues this way this time as well, and that's what we'll see, right? So this is how the cycle goes, but there are actually some fundamentals to this cycle progression as well. All of it is driven by some format of demand and supply, some format of supply compression, and some format of new demand coming in every single time. So let's look at slightly more what's going on this time, what's new this time, or what's changing this time, right? The first thing that's happening is that we've got something called as a spot ETF now. Now, for those of you who are not familiar, an ETF is basically an exchange-traded fund, something like a mutual fund that's available for users to invest in, where the actual asset that's being invested in is just Bitcoin. The US SEC this year in January allowed or approved 11 Bitcoin spot ETFs. Everyone from BlackRock, Fidelity, Vanguard, Templeton, Grayscale, and many others, basically the who's who of the world, have launched these Bitcoin spot ETFs. And the reason why they've launched it is so that more and more and more institutional investors can start participating in crypto, because ETFs solve for a lot of custody problems, a lot of fiduciary responsibilities that fund managers have, right? So this one launch has triggered a lot of inflow into crypto. These are the weekly inflows, and they just keep on growing. To give you guys some context, the gold ETF out there has been out there in the US for the last 6-7 years now. The gold total assets under management under the gold ETF is about $90 billion. With Bitcoin, we are already sitting at $50 billion in under 3 months, right? So in under 3 months, institutions world over have poured in half the capital that they had in gold already in Bitcoin, and it just seems like it's not going to stop at all. So there is a lot of demand coming in, right? But it's not only just this, right? Spot ETFs, of course, are driving demand, but what's also happening is that world over we are seeing that there are globally countries that are going through a new cycle of high inflation that's causing a lot of the local population to participate in crypto. For example, in Turkey, Argentina, and a lot of South American countries where there is hyperinflation happening, a lot of people just hold their money in Bitcoin because that's what's appreciating and that's what's relatively stable, right? So Bitcoin is more and more and more getting to this point where it's being thought of as this digital store of value, digital gold equivalent product, right? And then other interesting things that are happening on the supply side is there is something called as a Bitcoin halving event that's happening that reduces the total supply of new Bitcoin that will be generated. You can think of it from this perspective that, let's say, if tomorrow all the world's gold mines halved the production of total gold in the world, what will be the impact on gold prices, right? That's what happens with Bitcoin halving. The total global new Bitcoin production in the world goes to half. So there is a lot of supply side factors also that are driving up these prices. And these factors in one format or the other have repeated across these cycles. We are right now in what is likely the 5th cycle of Bitcoin, right? So answer the third question, is this the right time to buy Bitcoin? Well, ideally I say that one should try and do recurring investments, grow that asset base slowly and steadily, participate in this crypto portfolio creation and continue to invest in. Having said that, we are entering a new cycle. This is as good as any other time for all of you to participate, right? These are the 3 main questions that I wanted to pitch and get answers to, because this is what most people ask me. But what I also have are some other things that one should remember when they are wanting to invest in crypto. Firstly, there are just some basic do's, right? Like for example, choose a platform where security is there, compliances are there, that's registered with the government of India, like something like Mudrex. Make sure that you have your risk managements in place and do that using diversification and with research. Make sure that you do recurring investments, don't do everything all together, and I don't need to educate this to this audience. And of course, have some format of entries and exits in place, right? This is actually common knowledge. Like, I don't need to tell you about the do's. They are the obvious things that everyone should do when they're investing. The more important things are the don'ts, right? Firstly, don't overexpose to anything that you don't understand, especially to things that don't make a lot of sense to you. By default, if you want to participate in crypto, Bitcoin is the standard thing that you should go ahead with. most people should not be driven by FOMO. You should, and this happens. This always happens with every cycle. People start being driven कि यार Bitcoin का price ऊपर जा रहा है, ये token में इसने 3 गुना पैसा बना लिया, मेरे को भी पैसा बनाना है, and all of that, right? That is like a hallmark for people to start losing money. Try and avoid that as much as you can, and of course, get rich quick schemes never work, right? So please don't participate in it. This is actually what I wanted to talk about today. I want to spend more time now discussing or answering any questions that you guys might have regarding crypto so that I can try and spend some time busting any myths that people would have. Because apart from that, the only thing that I have to say is that at Mudrex, we are constantly working on making crypto more accessible. Right? For example, we recently launched access to the Bitcoin spot ETF for Indian institutional and retail investors in India. We've been moving around for the last 6 years now, offering close to 500 different assets available on our platform, and we've got global liquidity available at our end as well. So that's actually about it from my end. I just had a 15-minute quick conversation to do. I can throw the floor open for questions now.
Raise your hands, yeah.
I am Mr. Ramdas.
Good evening, sir.
Good evening. What is the minimum amount of investment you have to do in cryptocurrency?
Yeah. So
to start with.
So on Mudrex, we allow starting from as low as 500 rupees. I typically recommend that that's what you should start off with, a few thousand rupees just to get comfortable, just to understand what the asset class is, understand what's going on. And then once you're familiar with it, slowly and steadily scale that up. That's what we recommend. So you can start with as low as 500 rupees on Mudrex. There are no, as such, other minimums in there.
Hi, can you hear me? Hi.
Yes. Hi.
Here. My name is Anudeep.
Hi, Anudeep.
And this is a fantastic session that's going on, and a lot of good insights. So recently, RBI launched the e-rupee program, right? Platform. So how is it related to blockchain? And can you please explain us more about the program? And is it similar to blockchain? Or how is it going to scale up in the coming years? Please explain more.
Correct. So I can quickly touch upon the e-rupee as well. The e-rupee is something what we call as a CBDC. It's a central bank digital currency. There are two parts to the e-rupee. The first part is something that's very similar to what you have in the UPI, right? UPI is a payments interface. It's a unified payment interface. It's just something for you to send money to someone else and someone else to accept that money, right? With the e-rupee, what you get is not only send and receive, but configurationality of the send and receive. And let me give you an example. Are you familiar with Sodexo coupons, the food coupons, right? All of us know that Sodexo can only be used for food. Now, how is that guaranteed? It's because at the other end, the guy who's accepting will only accept it for food. Now, imagine you could do that with a UPI transaction, that a UPI transaction can only be done for food. Now, if this is possible, imagine doing this for, let's say, farmer subsidies, where the government is issuing subsidies to farmers to be used only for a certain set of transactions. And that ensures that just a much more efficient way of utilization of money. And this is just one example. There can be numerous other examples, right? For example, there can be programmability around credit repayment. There can be programmability around insurance events, etc., getting triggered. So e-rupee is this larger, broader framework that the RBI is trying to come up with. It's based on blockchain technology. It's a centralized blockchain digital ledger that is being used for all of this. And there are, of course, public infrastructures for all of this available in the format of BTC and ETH that allow to do things that are similar to this. The RBI is fairly bullish on the use of blockchain, as we saw much earlier in the slide. And they do want to encourage all of this primarily from the perspective that it can encourage a more efficient usage of our government treasuries and a more efficient usage of how the money how the money is used for the growth and development of the country. You're welcome.
Yes. Mr. Patel, so what would you recommend somebody who has an investment in cryptocurrency, right? So I'll take my example. I had something as 5% in 18. Today that contributes 40%. Do you recommend exiting, put hold, or do more?
Firstly, congratulations.
Thank you.
And then
I have one more follow-up. Yes.
Sure. And then secondly, see, actually the risk reward is completely from your perspective. I would have to know a bit more about what your status is, what your liquidity requirements are to give you a blanket answer. Typically, everyone's requirement keeps on changing as they progress in life. Their needs change, what they want to do with their money changes and so on and so forth. But I do encourage taking profits and booking it at some regular intervals. So if you've got this opportunity, you can use that money better somewhere else, or you want to diversify further invest it in some other part, you should do it. Otherwise, what will likely happen is that the volatility will start worrying you a bit too much. And at the end of the day, the real thing is that all of us want peace of mind, right? Like, paisa to bante rahega. But all of us want peace of mind, so you should worry about your peace of mind.
Hey, thank you. I have one more, right? So while you said don't get into that quick rich schemes, right?
Correct.
Is there a way to go and find good blockchain technology that are working in India, which are actually making some groundbreaking innovations, right? If you can dwell into, is there a platform that I can reach where I can find these companies?
Correct. So everyone says do your own research, right? It's everyone's favorite term. Mutual fund investments are subject to market risk. Please do your own research before investing, right? And it's hard to do your own research. It's very difficult, especially in crypto, because there are just so many, there is just so much noise around ye kharid lo, wo kharid lo, ye acha hai, wo bura hai, and so on and so forth, and it's hard. So at least at Mudrex, what we've done is we've now created something called as Mudrex Insights, where with every token, we try and summarize all knowledge into 3 different buckets: fundamental analysis, technical analysis, and sentiment analysis. And we try and give everything a score. So for example, a fundamental analysis will go from a -D to a AA plus. So you have like a range key, at what level is it? A technical analysis would go from fear to greed, and a sentiment analysis would also go from hype to no hype, and so on and so forth, right? So you can try and use that. That's actually my favorite tool to do all my research. So that's what I can recommend.
Hello. Hi, my name is Rahul. I have 3 questions. One, how do you manage liquidity on your platform? Second is, how do you manage, like, you don't end up listing shit coins? Okay, I think these are the 2 questions. I think if you answer, broadly, it will cover everything.
Got it.
And one more thing, one last thing, how do you manage risk? Because most of your users would be retail investors who do not even basically know that, they don't hold keys. So keys are with you.
Correct.
Right? So they don't use MetaMask and all.
Got
So
it.
how do you ensure that, how do you manage risk? So risk, liquidity, and selection of tokens and coins.
Got it. So let's answer it in the order in which you asked. So firstly about liquidity. Where we source liquidity, so Mudrex is slightly different. We actually connect with many exchanges on the back end. We work as a broker. So just like how, let's say a Grow or a Zerodha will connect with an NSE and will make sure that you get liquidity. Mudrex connects with many different such exchanges in the background. The benefit of things in crypto is that all exchanges are basically trading the same thing. It's not like something is different here and something is different here. So we can actually offer you better liquidity across the board. So we work with multiple different exchanges, not only ones in India, but ones that are global, along with exchanges that are decentralized exchanges. That's why when we commit a price to you, we are able to get that price always. If not, then we have an upper limit of the amount that you can transact with. Typically, it's about $25,000, $30,000. So to most people, it doesn't really matter. So that's that answer, very deep liquidity. The second answer is, how do we list tokens? So we've actually got a very detailed framework of listing tokens. And again, this is not something that everyone would be familiar with, but there is an association in India called as the Bharat Web3 Association. Is the association that, it's like the umbrella organization where all crypto entities work with. Mudrex, in coordination with the Bharat Web3 Association, did come up with a token listing guidelines and framework. We've got that framework. That framework looks at 17, 18 different parameters, from who the team is, what the token is, what is the developer contribution to, what is liquidity, where all is it available, and so on and so forth. So with all of that in mind, we've listed about 500 odd tokens on Mudrex today that's available for users to invest in. We do have some guardrails in place ki aisa nahi ho ki yaar anyone can put in, anyone can push and launch, because at the end of the day, there should be some history, some traction, and some real value also to what people are doing. So that's the answer to the second question. From a asset and custody management perspective, there are some of the very basic standard things that we follow. It's not it's not rocket science, actually fairly straightforward. You just need to do the right things. So we have our system of hot, cold, warm wallets. Again, I'm not sure if everyone is familiar with it, but cold wallets is like no one touches that, no internet connected devices reach it. It's just there in cold storage. You only access it when your actual liquidity dries out. Then there is warm wallets that are available for deposit withdrawal, and hot wallets where all the trading happens. So funds are custodied across there. Our warm, hot and cold wallets are also stored on insured qualified custodians. So I earlier said that Mudrex is not only registered with the FIU, but we are a registered virtual asset service provider in the EU as well. We are registered as a custodian as well over there, which means that we need to have audited repositories of these funds that we custody with other insured custodians. So Mudrex today has about $100 million insurance for its funds available right off the back that prevents against theft and basically malice as such. So that's basically answer to your 3 questions.
Yeah. Good evening, Mr. Patel. Bharat Jain here. I'm a bit old school investor, so what basic understanding of asset we have is something which has an underlying value and utility, which we could see with equities or bonds or possibly commodities or real estate or any other asset. So I would like to understand what is the basic underlying cryptos carry and their utility.
Correct. So let me give you a slightly more, I'll try and answer that question but in a different example, right? In the equities world, different stock analysts do different fundamental analysis of different companies in different formats so that they can get to an answer of what is fair value, right? And for example, how do you value a bank versus how do you value a pharma company versus how do you value a hospital are 3 very different ways to look at it. Actually, there are very similar methods as to how you can look at and value different crypto companies. So let me give you an example. We've got, apart from Bitcoin, we've got this other thing called as Ethereum. Now, Ethereum is some sort of a world computer where what you are paying for is access to compute on the network, and the value that Ethereum provides is this compute network that's always available and is always fair and will give you these answers under a certain period of time, right? So that has there is some way to value that. And now there are companies like Messari which are kind of growing like the Bloomberg of crypto, where they've started to publish quarterly reports of revenue, cash flow projections, network usage, so that you can actually do some sort of an analysis to come to a fair value of these tokens and of these blockchain companies or projects that exist. This was one example of Ethereum. There are numerous such examples where you can do some format of this calculation, because at the end of the day, all of these networks are providing some value to users, right? Let's take the example of Bitcoin. Bitcoin, the value that Bitcoin provides is very similar to the value that gold provides. That is going to be acceptable everywhere. It's a store of wealth, and it is slightly better than gold from the perspective that you can move around it. You don't need large vaults to store it. You can store it on a pen drive, and so on and so forth, right? So that's similar to the value that gold provides, and that's how that narrative is growing in the world. So the value accrual and what value each token provides depends on the token. Just like how you can't compare a bank with a pharma company, you can't compare 2 tokens, and you need to actually go into the weeds to understand what's the difference between them. Fortunately, there are companies now, or fortunately there are platforms now that have started to do that for everyone.
And what is the utility of this asset class, if we have to say?
As I said, right? So for example, the utility of Ethereum is that you need it to access the computer. For example, let's say AWS agar hota hai, Amazon Web Services hota, to access AWS you had to pay some fees, right? That fees you pay in dollars, over here you pay in ETH. And ETH has some demand supply, and on the basis of that the price moves up. So to access that world computer you need to have ETH. So that's the value that Ethereum provides at a very core grassroots level. And a similar answer can be given for the different tokens out there. Now, of course, not everything has value. For example, there are a bunch of these meme coins, right? Like the Doge coins and the Shiba Inus and so on and so forth of the world that have captured a lot of attention. And I personally think the only value that they provide is entertainment. It's just good gossip that you can talk over water coolers with your friend कि मैंने 300 रुपए डाले थे वो 3 गुना हो गए और मेरे को 1000 रुपए मिले, right? Like whatever, it's just entertainment. That's the only value that I see they provide, which basically means that they provide no value according to me as such. So the answer is nuanced and different for everything, sir. I'm happy to take this conversation later as well to give you more details.
Maybe, yeah, Patel, I am here, Raghu.
That's actually
right. Well, I think it'll be, I might not have a fireside chat with you, but I'm getting a couple of questions from the audience, so I'll probably take that and put it across to you. There are a lot of advisors here in the gathering, and they would want to understand is, how would the monthly payout, if in case they're recommending it, how is the monthly payout going to happen? If you can explain it in a...
Yeah, so I think, so at Mudrex, we work with a lot of different folks, and we have a standard referral program. But apart from that, we also have created a new program for working with wealth managers so that there is a referral payout. All of the details are actually available outside in a pamphlet like this that can be accessed fairly easily. But I can just give you guys some basic understanding, right? For example, let's say if you could do some format of wealth accrual from your portfolio clients worth 1 CR, then the payout would be about 2.75%. But that increases to about 4% as it grows. Now, the reason why we are able to offer these higher payouts are simply because the asset class is growing at that rate and simply because the asset class is improving. Now, earlier I said, of course, don't invest in anything that sounds too good to be true. This actually isn't too good to be true. This is somewhere where mutual funds are or used to be early on.
Right. And, you're also talking about Ethereum. So next question is around about that only. So does any crypto project such as BTC or Ethereum make money, and how?
Yeah, actually they do. There is a, so last quarter was actually the first time ETH ran into profit, and there is a way in which they calculate profit.
Okay.
The way they calculate profit is that how many ETH tokens we distributed, what was the value of those ETH tokens, and how many ETH tokens got used to compute everything. Those profits go back either in the format of, I shouldn't say dividends, because basically the way they go back is that any additional revenue that's generated is just used to buy more ETH. So it's like a share buyback. That's what basically happens.
Okay.
That is just tokens get bought, which means there is a demand pressure and that causes price to go up. There are various different platforms that actually do quite a bit of revenue. ETH, Solana, Tron are actually the three ones that I can think of at the top of my head are making a profit right now.
Okay.
As where we are.
Right. Over to you, Anita.
That's Edil Patel for us. Give him a big round of applause for that very informative session. Thank you so much. As he told, he'll be here at the dinner time, so you can ask him questions one-on-one. The whole team is here. You can walk up to anyone and ask questions if you have. On that note, next session that will help us look at fixed deposits in a new light. While this assets class is known to most of us who's present here. So let me ask you a question. How many of you say that fixed assets are one of the top choices to invest? If you ask me, I mean, the only choice, the only thing I'm doing is fixed asset. Fixed deposit. How many of you? FDs. How many of you believe in that's my choice of investment? Okay, most of them. Lovely. I'm sure this chat will, with Mr. Saurabh Jain, co-founder Stable Money, the way we think of FDs as fixed deposits will definitely change. So put your hands together. Let's welcome Mr. Saurabh Jain to stage. A very, very warm welcome to you, sir. Also joining Saurav, we have Kshitij again on stage. Everyone, a round of applause.
Right. Thanks, Anita. Sorry, yes, we're going to be discussing something which is very dear to everyone out here, and not just to them.
10 people I saw hands raising, so I'll have 10 questions minimum.
No. I'm sure at a certain point in time, we all have invested in the asset class, and not just us millennials, and but our fathers and our grandfathers have also been benefited with this asset class when when the new asset class didn't even exist, sort of equities and bonds. But yes, just to take the conversation forward at this point in time, is it the right time to invest money in FDs?
No, actually, before getting to FDs, I don't know how many people know here about stable money. So, stable money, as the name suggests, is for people who believe in keeping their money safe and growing it, where they focus on making more money through their business or upskilling themselves. We started 1.5 years back, worked with multiple banks and launched FD as a product to enter the market 6-7 months back. And our concern was also similar to maybe a lot more people here who would ask, saying that in this time of mutual funds and stocks,
Exactly, yes.
why are you doing FD? But there's so much pull in the market.
Exactly.
And some of the insights I would love to share, but to answer some of your, to one of your question about is this the right time? If you look at case in point right now, the repo rates are at its peak, and that's why the FD rates. The highest FD rate in India for a regular citizen is 9.01%.
Right.
And if you go for a senior citizen, it's up to 9.4, 9.5%. So this is a good time, also beats inflation that most of the people would be worrying about. And from here, depending upon, at least for the last 5-6 times, the repo rates have not changed. How the US market is behaving, we believe the repo rates maybe in next few quarters will start going down. And that will have a direct impact on FDs as well. So that's why you will see that a lot of banks are giving higher interest rates on short-term FDs, right? So which is generally unusual. Otherwise, you'll have 3 years, 5-year FDs are at its peak because most of the banks know that the FD rates will fall. So they don't want to give the higher interest rate for a longer period. So generally, the shorter periods are higher. So yeah, I think generally what we see as a common man that this is a good time to lock in this interest rate that you get up to 9%, 9.5%, before it starts falling.
Exactly. So when we say the right time, that's the right time what we are talking about. If in case you do lock it at this point in time, there's a higher chance that we'll be able to get over 9% that you said?
Yes. So the 9.01 for people who are non-senior citizen is the highest interest rate for a 2-year FD right now in India.
Right. Now, Saurabh, there's another question is, how this climate has changed over the past 10 years. If let's say I take a decade and investment into fixed deposits, what used to be there earlier and what used to be there now. Definitely platforms like Stable Money had really helped investors to, just on a scroll or a click of a button, they can actually, in fact, invest in different FDs at a certain point in time. They're not just limited to the banks, if I'm not wrong.
No. With Stable Money, you can invest directly with the bank, and the most important thing is you don't have to open a savings account. So what has happened is over these decades, what we have learned from our parents or grandparents that you have to go to a bank, open a savings account, and then you have to manage that savings account, right?
Exactly.
There is a minimum balance, and then you have to keep tracking that. And now, with so much of tax filing and everything, you'll have to make sure that all these statements are filed before the tax. So the best thing that we thought could happen to the retail investor in this time is you can open FD without opening a savings account. So when you put a money, your FD starts, and when you withdraw that money or when your FD matures, there is no relationship with the bank that exists that you have to maintain beyond the FD right now. But I think one of the questions that you were mentioning in this last 4 or 5 years, what has been happening?
Exactly. How has the climate changed, over a period of time, especially in the last 10 years?
Yeah. So if you see in last 4 or 5 years, interestingly, what has happened is with so many companies coming in, with so much focus or education that is happening, whether on YouTube, off YouTube, when people are talking, some of the advisors who are helping the clients is that mutual funds and stock is the hot topic, right? Where people are talking, there is a penetration happening, and there is so many people who have got into this. But I'll tell you one example, right? Just before Stable Money, I was the CEO of Navi Mutual Fund. So I've seen this very closely. And to bring this point, right? So people used to invest in a Navi Mutual Fund NFO.
Okay.
And on day one, they used to withdraw. Okay. And we were very shocked that why is this happening? And when we used to talk to those customers, we realized that they said, "Ye to IPO ki tarah hai na, to day one pe gain hoga." And they withdrew. Right. And if you see, so around us is the primary circle that we see, right? Ki what is happening, what people are talking, people hear as well. But if you go to really India 2, India 2.1,
sure,
you will realize the premiumization is not happening upwards. People are not going from FDs to stocks to mutual fund. It's actually happening sideways. So people are going from going to banks physically to going digital banking. They are going from FDs in one banks to FDs in multiple banks. And that's the comfort zone. And that's why you will see that across multiple companies, what we keep reading, keep hearing, is people who got from FDs and savings account beyond their comfort zone into stocks and mutual fund. As soon as they see negative returns, these people churn off the platform. And that's the bigger problem. And we thought that the best way to take these people and democratizing stocks and mutual fund and financializing these audience is to take them through a route which is slightly different, not tried yet. So take them with FDs and then slowly talk about higher risk products like bonds and then stocks and eventually multiple such products through the platform. So that's what we are trying, where we believe that what initially banks used to do, right? Like you remember whenever banks used to open, they used to go open a branch in your neighborhood and they'll give higher interest rate savings account, higher interest rate FDs. People build that trust and then you sit across the table with the bank and then talk about insurance and multiple other products. So I think that's how we believe that if you want to really get this India 2, 3, 4 into the markets, you don't talk about stocks and mutual fund on day one. You talk about the product that they're comfortable with. I'll tell you one better example. Right? In 2, 3, 4, everybody here is closely following stocks. Today, Maruti hits all-time high. The people don't move from Maruti products to Hyundai. They move from sedan to SUVs of Maruti. That's what happens. And that's why I believe that that is the path to take these customers to the higher risk products.
Absolutely. In fact, technology has played a very crucial role in institutionalizing these products at a bigger scale. And given the fact that penetration of internet has happened, it's not just limited to metros. It has actually gone into the tier 2 and tier 3. If you can also throw some statistics on the kind of business that you're getting from the tier 2 and tier 3 cities.
So 65% of our business comes from tier 2 cities.
Wow, 65.
65%. And I'll tell you some more data points which will be very interesting. So there are 50 lakh Google searches happen in India to talk about FD interest rates. And you will be surprised that 30% of those searches are happening for your primary bank. So let's say my primary bank is HDFC Bank. And if I have to understand what is the FD interest rates, and you can open your net banking, it'll take you a lot to figure out what is your interest rate. And that's why people are going on Google and general time to decide where should I keep my hard-earned money in FD and what is the right FD for me is 2 to 3 weeks. Because people will go across different banks, download the rates, compare which is the right tenure, what are the breaking charges, how is it working, what is the additional for senior citizens and all of that. That is 2 to 3 weeks. And 50 lakh searches. And that's why the first thing that we built on Stable Money is that all the banks in India, so there are 200 banks for which the FD rates are real-time updated on our app. So if you go and open Stable Money, you will see it. All the bank rates on the app where you can compare between the banks very easily, that what are the penalty in short term, medium term, long term, what are the rates. Hence the decision making to put that money is now reduced from 2 to 3 weeks to let's say 5 to 10 minutes. And that's what is happening right now. So in tier 2, 3, 4 as well, we realize that of these 60% of the people, the most important thing is how do I get access to this information? And I'll give you one more anecdote, right? So if you will talk, and I don't know how many people know this, but whenever you ask them to prematurely withdraw FD, there is a misconception that the entire interest that you have earned will be gone. You will get only the principal amount. And I'll tell you how deep-rooted this is. It comes from our parents where if they have to break the FD, they go to the branches. And that branch guy who is familiar to them,
branch manager would definitely
will say कि अरे मत तोड़ो यार, आपको पैसा नहीं मिलेगा. And that has come to us. And now we don't know like what is the penalty. And the calculation is so complex. Right? That if you book a 2-year FD and if you break in 6 months, you'll have to sit with an Excel calculator to know how much is the penalty. And nobody tells you that upfront. So some of these things we try to simplify. And people now who have seen Zomato, Swiggy, Ola, Uber across these, like Swiggy is present in 500 cities in India. So people have experienced what is the good product is. And if you want to give that India's favorite asset class that kind of a touch is what we're trying to do. And that's why these 60% of the people, and you will be surprised that of these, half of these people have monthly salary of less than 50,000 rupees.
Okay.
Like, and these are the people who are becoming early adopters of the product because they understand the product so well and the
that's
value.
a very good touch point as well. Yeah. For stable money and for the asset class that they have early entrance in the, at least people have started planning in that perspective.
Yes, yes. And they see the value. I think the biggest inflection point that has happened is in February 2020, where the RBI insurance on FDs have gone from 1 lakh to 5 lakh. And there is a whole session that can happen how the 5 lakh insurance work, right? It is per PAN every bank. And if you do joint accounts, there are multiple things that you can do. Right. So, and that's what people are now realizing, that rather than putting 30, 40, 50 lakhs in one bank, I will diversify 5 lakhs across multiple banks and increase my returns from, let's say, 6.5 that people are getting to 9.5 now. And where the city is so much cost conscious, right? Where they are traveling also, they'll do searches across all the websites. When they are buying, they'll do searches across all the websites. That 2 to 2.5% for the tier 2 people matters a lot. Yeah, so.
Absolutely. Now, also to understand, we have only FDs in place, but there are different types of FDs. If you can also, take the audience through that perspective as well.
So I think technically there are multiple FDs. There are corporate FDs, there are flexi FDs, which takes money from your savings account. There are senior citizen FDs. There are regular FDs. There are now unique FDs which are coming in, like green fixed deposit, right, which SBI has launched and one more bank has launched, where the money that comes into those deposits will be deployed or given as a loan for the projects which is focusing on sustainability. So these are, kind of companies. So these are the new things which are coming in. Obviously, for NRIs, there are a different type of FDs. But I think the most important thing that matters is NBFCs, FDs, which are not insured, like Shriram and Bajaj. Very well-known brands. There are multiple such, like Mahindra and all of that.
But they do offer high interest rates with slightly risk.
Yeah. So they do offer high interest rate. And I think we have spoken about the credit ratings. They have good credit ratings, and we have seen these brands for the last 50, 60 years, so we know that there is some personal connect and the chances of defaults are low, but they don't have insurance. So the banks that are, banks which are given licenses by RBI will have that 5 lakh in DICGC insurance on this. And interestingly, I think 4 or 5 years back, the NBFC FDs used to offer like significantly higher interest rates. But now with small finance bank coming in, which are as good as big banks, they are offering almost or even more interest rate. Like for example, I've told 9.01, Suryodaya Bank is another small finance bank which is giving 5 lakh insurance to people. The interest rate is higher than some of these NBFCs as well. And people are getting aware. So that's also one factor that people should consider before booking an FD, that whether it's insured or not. But yeah, there are multiple FDs. There are different tenures that people can choose, and there are different ways in which you can do the laddering of FDs. So even if you want to make FD little sexier than what we think it is, there are multiple ways in which people actually do FDs, right? They do laddering of 1 year, 2 year, 3 year FD, so that the reinvestment risk goes down significantly.
Absolutely, absolutely. In fact, one of the things that we also adopt is, if let's say if some money is needed at the end of 5 years, then we don't necessarily need to invest a similar amount because the compounding will take place. So for the first year or for the second year, the amount is slightly less, so that the compounding of the first year will get on to the second year.
Yeah. and I think another point about compounding, right? Let's say if a bank is giving a 9% interest rate and it's a 2-year FD, the 9-year compounds quarterly. So actually what you get as an annualized is 9.25%, right? So this is how, so I think the biggest thing that we realized is that despite we said that FD has been in existence for so many years, there are so many things that primarily we don't understand when we start comparing.
True. No, absolutely. And, it has been labeled as that FDs are for risk averse. right? Whether we want it or not, but yes, they've been labeled as FDs are for risk averse. But they're giving 9% as we rightly talked about.
Yeah.
Now, if you look at US Fed, so whenever Fed rate goes on, there's a flow of money that goes from equities to FDs, or basically the treasury, right? So when FDs is giving you 9%, then how can we say that it's a risk averse? Any investors are getting 9% kind of a return, and that is also compounded.
Yeah.
Let alone the taxation part.
And you see for the last 15, 16 years, on an average, the rate at which FDs are growing every year is almost 15%. Even this year, till February, over the last 12 months, this has grown at 14%. And you can imagine at what scale this is happening. There are 233 million FDs in India. And at this scale, if it is growing at 10-15%. So what we see, what we hear is a very small part of the investment world. If you go to this rest of the India, you will see that the rate at which people are putting in money is significantly higher.
Absolutely. So it's like that we are doing it, but we just don't talk about it.
Yeah. Like everybody has done. And there are a lot of people who don't do FDs, right? But if you see, either the parents or wife or somebody else is doing FD, that builds the comfort or the cushion for you to go and take a higher risk on some of the other products. So somewhere there that risk averse FDs do exist in the portfolio.
Right, and rightly put. So it does not make a very good conversation over a drink. So
yeah, but I think that's what I'm saying, right? If you talk about, I can give some 3-4 key pointers that you can talk about FDs that most of the people who have been doing FDs don't know. So you can use that in some of these conversations as well.
Great. Now, so let me also ask you that we talked about domestic investors now, but what is there for the NRIs in case कहते हैं ना मिट्टी से जुड़े रहना है हमें we're talking about that class of investors who might be abroad, but they're the family is here, but then they want to put in some kind of money. What are the options available for them?
Yeah, so I think if you see, there are NRE, NRO kind of accounts that exist, and there are different FDs for NREs and NROs. So whatever the NRIs are earning in India, they put it in NRO and there is an FD. Repatriability is little low, restricted. So you can't move the principal amount outside India. You can only move the interest. And whatever you earn as an interest is taxable.
Okay.
But NRE, people can move in money from, let's say, US to India into the NRE account, book an FD in that bank, right? And whatever you earn is non-taxable. So you don't have to pay the tax because you have already paid the tax in the...
let's say someone from US wants to invest.
So they can put it into the NRE account, and that NRE account, whatever interest they earn, they don't have to pay the taxes. The only thing is the rates for NRE and NROs are slightly lower than what you get for the regular citizens within India.
Right. And what about the KYC? Is it slightly different?
Yeah, so KYC is slightly complicated and it's not completely digitized yet. Right? For example, if you book FD right now on stable money, it will take 3 to 4 minutes. You'll have to enter PAN, you'll have to do Aadhaar verification, give some details.
Information is automatically fetched.
Everything is, wherever possible it's fetched. Right. But the most important thing for NRIs is to open NRE and NRO account. And that's a manual process.
That will happen from stable money or from any
No. So that happens directly with the banks.
Okay.
And I don't know so many things about that, but it is mostly physical. So you'll have to go to your bank, open an NRO account or NRE account before going outside India, and that's how you can start transferring the money.
Right. Now, so if someone is planning for someone is constructing a portfolio. We've talked about different asset classes. Definitely equities will be there. What is the kind of percentage you think that it is ideal for investors? And yes, this will be largely with respect to the liquidity, because it is the most liquid instrument that money can buy at this point in time.
So I think the most important thing when we should look at portfolio allocation is we should see that what has really stand tall in this whole 30-40 years, right? Because a lot of formulas have changed. And that will show in numbers. So pan-India, 35% of household savings is in fixed deposit. And I'm talking household, which is parents, you, like everything. I think that's the kind of amount that should exist. Now, at an individual level, this could vary because your family and everywhere else, there could be higher FDs or lower FDs.
True.
So I think that's one number that we have in mind. I think another formula that people use is as the age grows, you start increasing your debt portfolio in that. And in that debt portfolio, 1/3 of your money should be in fixed deposits. So there are multiple ways to look at it. But if we have to check some thumb rules, 35% is what we have seen as a national average.
Right. Now, another thing is that how can, as we pointed out that as the age grows, then 35% is something. So how can investors do retirement planning based on FDs or with FDs?
So I think retirement planning is one part where you focus on debt and equity mutual fund portfolio. True. As you go towards 60, almost 80-90% should be in debt. And you should look at 1/3 of your portfolio should have fixed deposit. So going from, let's say, 30 years of age to 60 years of age, you start with a 10-15% of your fixed deposits, 10-15-20% of your debt to almost 70-80% over these years. That's what Vanguard has been doing in the US for a quite long period of time. But I think one important thing other than retirement planning that people should consider, which is also a very recent term, is emergency fund. Right?
Exactly.
So people talk about emergencies a lot, that during emergencies, whether it's a job loss, salary cuts, medical emergency, or anything that happens, people are taking personal loans. You see how the rate at which lendings are growing, or people are withdrawing their stocks and mutual fund investments, which they always thought will be for the long term.
Exactly.
Right? So, and in that cases, I think there is this concept of building an emergency fund that, depending upon your income, depending upon your expenses and the families and the insurance that you have, generally you calculate what is the emergency fund that you have. And that emergency fund should have 70-80% of the fixed deposit. Because the key parameter or the characteristics of an emergency fund is that it has to be liquid. That's the need, because you might need it at any point in time. It should be risk-free. You can't keep it in stocks or mutual fund, because the day you need it, what if the markets have fallen? Right? So you can't withdraw, the money is not there. Right? And the smart way of doing that, if you are anyways keeping this as an emergency, better to earn slightly higher returns. So that's one thing that people should definitely consider. Like, I have calculated my emergency fund on stable money, and it comes to 14 lakh. And that's what I think Edul keeps mentioning is the peace of mind. So if you want to have that peace of mind, build that emergency fund of whatever is 6 lakh, 10 lakhs, 12 lakhs for you and your family, and have most of that portion as part of this. I think then from there, you start thinking about your retirement as well.
Right. Well, we have 5-6 minutes with us. I'll open the floor for questions.
Yeah, you spoke a lot about the banking sector's fixed deposits.
Yes, sir.
What about corporates? For example, Unitech Limited, they have defaulted. They have been in the real estate business from 1972 onwards. How secured is a fixed deposit in such type of cases? And there were many fly-by-night operators in Chennai also, before many years back I'm talking about.
Yeah.
That those were also not secured.
Yeah.
Now, how do you go about it? Because even brokers, they don't find when they would default.
Yeah. No, sir, very honestly, my parents lost 35 lakhs by investing into such companies. So I genuinely understand the pain of that, and that's their entire life saving. And that's where we talk about that DICGC insurance a lot, sir. Like these bank FDs, which are giving you 5 lakh insurance. And we know that there are larger banks that we are very confident that they will not default. And they might not default. There is only maybe 0.1% chance. But you ensure that all the FDs that you have, whatever you have put across your tenure, is RBI insured with the banks. These list of banks are published by RBI. It's on the website. If it is not in that, Don't go for the higher returns. It's also sometimes our fault, sir, that we go for a very high lucrative interest rate without thinking about the risk that it entails. So, and that's where we talk a lot about DICGC insurance, and I'll tell you how DICGC insurance works, and you said that how secure it is. Let's say one of the banks on our platform is Shivalik Small Finance Bank. It gives 8.7% for a year. And if you look at annualized, because it's quarterly compounded, it comes to 8.9, 8.95%. Up to 5 lakh rupees, if the bank defaults or shuts down or any issue happens, you get within 90 to 120 days the money from DICGC, which is a subsidiary, wholly owned subsidiary of RBI, that money into your account back. And this 5 lakh is principal plus interest. So generally what we also recommend to our customers is that you put around 4.25 lakhs so that it will keep earning interest. And at its peak, let's say if it reaches 5 lakh and anything bad happens, you get your entire 5 lakh back. So please, whether on Stable Money app or off Stable Money app, sir, please look for that DICGC insurance. And all of this information is now readily available, which wasn't there initially when my parents were booking FDs onto this. So look for banks, try and avoid some of the corporate FDs is what we think. And this is no advice, this is just my personal experience of seeing the pain that they have gone through because whatever they have saved is lost in that. DHFL is another example of that.
Yes. Any more questions that we have?
Thank you.
Good evening, Saurabh. I think that was a presentation with a lot of clarity. Now, just one aspect you mentioned about using FDs as an emergency funding source. And is the process through laddering that you have different maturities and therefore you can look at that? Or are you just suggesting that just be willing to pay the 1% penalty or whatever computation that applies and use that as the emergency fund? I mean, what options can you talk about?
Yeah, so sir, laddering is one good technique to do all your FD investments. But when it comes to emergency fund, we are not talking about specific maturities right now because by the nature of that fund, it can come at any point in time. So you can have 1 year, 2 year, 3 year FDs. But let's say in 11th month, you have an emergency. You'll have to still prematurely withdraw because you can't wait for the 1 year FDs to mature. And another fact that I've realized is people don't understand is if they book a 3 year FD today and break it in 11 months, if they book a 2 year FD and they break it in 11 months, if you book a 1 year FD and break it in 11 months, people think that if I book a 3 year FD, let's say at the highest interest rate and break it in 11 months, I'll make more money versus if I book a 1 year FD and break it in 11 months. But that's not true. Across all these three things, if you are prematurely withdrawing the money, it doesn't matter that what tenure you have booked. So, sir, generally, because we are just specifically talking about emergency fund, it doesn't matter where you have. But what matters is you do laddering by banks and not laddering by tenure. So what I mean by that is different banks have different penalty charges. Let's say Utkarsh Bank on our platform doesn't charge premature penalties, right? So they will not charge you that. But some other banks do charge, and it is sometimes 0.5% to 1%. So keep that in mind while booking an emergency fund so that you can diversify between banks rather than between tenures because you want to minimize the premature withdrawal penalty charges for you. So for emergency fund, tenure doesn't matter, penalty charges matter. For just as an FD investment for long term, laddering matters. And that's where you have to do a combination of banks and tenures, what you were mentioning.
So these premature withdrawal penalties are not regulated by the RBI in any way? It is regulated between banks?
No, it is regulated by RBI, but there is a range that banks can decide what they want to charge to the customers.
All right, I think if we have any more questions, you can take it forward in the dinner session or the networking dinner time. Over to you, Anita, on that.
Thank you. Thanks to Saurabh.
Thank you.
Thank you. Very interesting session. Ladies and gentlemen, put your hands together. Let's say thank you to Mr. Saurabh and Kshitij, both of them. Thank you. All right, now before we move on to the last session of the evening, most of the audience who are present here are requested to talk a little more about crypto commissions or give a little more information about it. So we have a brief or a quick one slide on crypto commissions by Mr. Pranjal, VP Brand Marketing, Mudrex, to come on stage. Put your hands together. Let's welcome him on stage.
Hello. First of all, thank you all for giving your attention today. So the problem that we try to solve is that a large number of customers in India who want to invest still want to invest via a lot of you guys. Invest via their own investment advisors, their own people who they have been trusting since years. So we launched a crypto partner program where you can partner with us and offer crypto to your users, to your customers who want that exposure. So it's fairly simple. It's very simple as in mutual funds or any other asset classes. The kind of AUM that you bring on the platform and a corresponding commission attached to it. There are slabs and the commissions keep increasing as you go on to a higher slab. That's calculated on a daily basis, very similar like a savings account, how savings account calculate returns. And so that's it. If you have any questions, any more details, our team is present here. I'm here, Edul is here. You can please come up and have a conversation with us. Thank you. Thank you.
Thank you. Mudrex team most of them are wearing black t-shirt. They're present here. If you turn around, they're right at the behind, so you can walk up to them. If you have any question, you can ask them any point of time. On that note, the last session of the evening introduces us to real estate investment trusts, or we call it as REITs. These investment options offer a unique opportunity to invest in real estate without the hassle of directly owning and managing properties. Our speaker for the session is Mr. Avijit Mishra, co-founder Alt DRX. Put your hands together. Let's welcome Mr. Mishra on stage. Warm welcome to you, sir.
Hello everyone, can guys at the back hear me? Yeah. So I'll start with a very simple question. How many of you know about REITs? Raise your hands. Oh, quite a few. How many of you actually advise or invest in REITs? Advise your clients to invest and you have invested? Okay, that's disappointing because the number is very few. On that note, we'll start. So I will talk about REITs which are listed, and there are some new class of REITs which are coming in, which are more like private REITs, and then obviously there is fractional ownership in real estate as well. So we'll talk about all of that. Sorry, technical issue. So basically, REITs or real estate investment trusts are pooling vehicles in which investors can pool money and invest in a trust which manages owns and operates a portfolio of income-generating real estate. Now in India, if you see today, there are about 4 real estate REITs regulated by SEBI, listed on the NSE and BSE. What is one of the most important benefits of REITs is the ticket size and liquidity. As you know, real estate is a bulky asset class. You probably need to invest in Bangalore at least, maybe today, almost 1 crore rupees to buy a house. If you think about commercial or income-generating properties, it could even be higher. It could be in crores. What REIT does give benefit is you can own real estate assets in very small ticket sizes, and there will be always liquidity because they're listed on exchanges like equity. Asset classes which are allowed by SEBI for investments in REITs: commercial asset classes, offices, hotels, retail, industrial, which includes warehouses, and healthcare. Another regulation is 80% of all the assets should be ready so that the small investor doesn't have the problem of construction and operations risk. Distribution: most REITs distribute the rental income which is received from the underlying properties in the form of dividend, in the form of interest, and in the form of return of capital. Benefits, as I told you: liquidity, transparency because they are all SEBI compliant, they are listed on exchanges. Asset quality is something which we can talk about. Diversification because it's obviously a portfolio of assets, different geographies, different kinds of assets, and obviously distributions and performance, and last but not the least, regulated. If we look at a REIT structure, in a REIT, the trust is the one which owns the properties. A developer is mostly the sponsor or the investor who comes in and develops it and brings it to the trust. There is an asset manager who manages the properties, and obviously there is a trustee who holds the units. The REIT owns multiple properties through SPVs, and from where the rental income is generated, and it goes to the REIT and it gets distributed to various investors. This is about normal REITs which are listed on the NSE and BSE today, regulated by SEBI. We will also talk about fractional real estate because very recently SEBI has come up with something called SM REITs. Now one of the things was asset size. 500 crores and above was the normal REITs which was listed. We started with Embassy in 2019, and we have 3 other REITs today. What SEBI has now allowed is smaller REITs, single property REITs, between 50 to 500 crores. Obviously, many of you would know about fractional real estate investments in which people can invest with 10 to 25 lakhs. So that will come under SM REITs. We'll talk a little bit more about that. And since we are talking about crypto, we have one more thing which my company, AllDRX, is doing, is tokenizing even smaller assets. We'll come to that as well, in which you can invest in real estate at probably 10,000 rupees. Talking about SM REITs, so now all the fractional ownership platforms can get regulated by SEBI. There's a special license which is given. In traditional REITs, the manager needs to hold about 10 to 15%. In this, it is capped at 5% or 15% if there is leverage. As I said, 50 to 500 crore asset size with a minimum investment of 10 lakhs. Again, the asset class could be residential or non-residential or commercial. So there could be standalone hotels, smaller commercial buildings, hostels, rental housing, schools, etc. The only thing different is no under construction assets allowed. Tax efficiency and flexibility. Obviously, 10 lakhs means a lot more people can invest. A commercial property on MG Road could be worth, 5 crore rupees or 10 crore rupees. But if it's broken down into 10 lakhs, obviously, a lot of people can invest. And obviously, there are efficient distributions because it's in a SPV structure. and obviously, and then there is mandatory listing on the NSE and BSE as well. So that gives more flexibility. So I was talking about listed and unlisted REITs. So a listed REIT is marketed by stockbrokers and is listed on a stock exchange. It's a perpetual vehicle wherein the underlying instruments are listed REIT units. What all DRX today is working on is something of a private REIT, which is through asset tokenization. So an SPV could be a LLP or a private limited company, and it can be marketed and listed on private marketplaces. This could be a closed-ended vehicle or a perpetual vehicle, and investment instruments could be NCDs, SDRs, or tokens. And the marketplace we are creating, all DRX, is obviously we want to look at the future, how everyone can invest, how Middle India can invest in real estate. And I think Adil has talked about crypto and tokens. This is, while we call it tokenized real estate, it's not tokens. I think there was a question on what's there in the back. Obviously, these are asset-backed tokens. And I'll just leave with, is there audio? So we have various eminent people, people in the world of investments talking about tokenization of real estate assets. We have the CEO of BlackRock, we have the MD of Morgan Creek Capital, and we have the governor of RBI talking about asset tokenization, real estate tokenization. Can I play it? Probably that video will come, but what everyone talks about is these private REITs and asset tokenization is one for the future. Tokenization of real estate will enable everyone and anyone to invest, probably starting at 10,000 rupees now. It will go down further in the future as well. Once the video comes, we will come, but that's all from my side. If there are any questions, more than happy to take.
This is Murli here. This tokenization you told, and here you told this is a perpetual vehicle, in fact. Can you just elaborate, because there is a closed-ended and perpetual.
Yes.
How it works, in fact. Because once it is tokenized and if it is closed-ended, we do understand. But when there is when it is having perpetual vehicle, then how it works, in fact? Can just...
It works very similar to a listed REIT, in which the SPV owns, the trust owns the SPVs, which owns the assets in a normal REIT. In tokenization, what happens? The SPV owns the asset forever, and tokens are of the SPV. So if the asset is not sold by the SPV, it is held in perpetuity, and the returns keep coming. If it is a rent-generating asset, then obviously rentals come in. Then obviously on the private exchange, you can trade it and you can exit. So private exchange, what it does, it gives the liquidity.
So investor can exit out of it?
Yes, because investor holds a financial right. Investor doesn't own the asset. The asset is owned by an SPV. So the SPV can be a perpetual vehicle. In the REIT's case, it's the trust and the SPV. In this, it's only the SPV. That's the difference.
Every investor, you and I, will have our own number, our own identification.
Every piece of real estate, every private business, everything of value in the world. Though we are using it, there are many users who are also using it.
We believe the next step going forward will be the tokenization of financial assets.
Made a statement that every stock, every bond, every currency, every commodity, every piece of art, every bottle of fine wine, every collectible car, every piece of real estate, every private business, everything of value in the world will eventually be a token. Tokenization will facilitate what you call a large value asset. An ordinary individual who doesn't have the affordability can become a part owner of a high valued asset. That is what blockchain will facilitate. That is what tokenization will facilitate.
Further questions?
Yeah, hi, I'm Arvind. I'm a chartered accountant by profession. With the introduction of the new SM REIT, amendments and the regulations, right? How would you see that it would play out, especially for players like you or existing fractional ownership platforms? Would you be forced to migrate or register with SEBI, what challenges would you foresee, and what's your take on the regulations?
See, right now, if you see it's not mandatory, then obviously there are also norms which may or may not allow us to register as well. 50 crores the asset size should be. I mean, what had happened over a period of time is because of the structures, because of the SPV structures, because of private limited and public limited company MCA norms, a lot of fractional ownership players had kept the number of investors to below 200 and the asset size below 50 crores as well. So which means a lot of existing structures will probably cannot migrate into this. And obviously it's optional as well. But what we foresee going forward is that the cap of 50 crores will definitely come down. So what we are doing currently is we have pivoted when the draft regulations came in last year, made sure we are compliant to all that is written in the regulations. While we cannot be regulated because of the limitations, but we make sure that we are compliant with all the regulations. So in case in the future the SEBI comes down with the 50 crores, we can be regulated. So that's all I can say.
Hello. Yeah, my name is Rahul. So you said that the asset will be tokenized, and then if I have to find liquidity, I'll find the buyer of my token in a private exchange.
Yes.
But how will the price discovery happen?
So the price discovery will be, obviously, like mutual funds have NAVs, there will be a market price which will be given on a daily basis based on the valuation and a certain number of parameters which are there. So you have like a NAV given on the beginning of the day. So let's say trading starts at 9. So you have a NAV or a market price, and you can place a market order or you can place a limit order. There may be a plus or minus 5% or 10% upper circuit and lower circuit within which you have to place it.
Yeah. Allow me to ask you a very basic question, right? Let's say there is a residential apartment, right? You own a unit and you purchased it for 1 CR, hypothetically. And let's say 5 months down the line, I want to sell that unit that I own, that token, right? So will you value that asset every month? Or because it's very difficult to find the value of a real estate on an ongoing basis.
Absolutely.
Right?
I'm a professional. I mean, in a past life, I was a real estate valuer. So I've done this for 15 plus years. The valuation is every quarter, but there are other parameters which will also determine the price. So we bring in a little more technology into it. We have a machine learning algorithm which determines the price based on the valuation report, based on if the rental income which is distributed every month for that apartment which is on rent is more like a dividend. So there is X dividend, come dividend. then obviously there are other market factors. We look at the demand supply as well. So this is more like a, obviously it's a work in progress. We are in a beta stage right now. So things will evolve, but it will be there, and we'll use technology to make sure, it is a reasonable number, backed by a valuation report by a accredited valuer, and obviously the market factors also playing a role.
Thank you.
Good evening. You mentioned Embassy as one of the players in REITs. Who are the other three?
So Embassy REIT, obviously it's Embassy Office Parks, which is invested by Blackstone. That's number one, which started in April 2019. In August of 2020, Mindspace REIT came on. Then we have had the Brookfield REIT, I think, which came in early 2022. And in 23, we had the retail, the Nexus Small REIT. Now, these are the 4 real estate REITs. There is a similar product called InvIT also, which is an infrastructure investment trust. So there are 3 of them as well in the country.
What are the safety networks for a retail investor?
These, actually, to be honest, these are more like, very much like equity. As in compliant with the NSE and BSE and SEBI norms. The asset, again, the only thing is that instead of a business valuation, there is asset valuation which comes under. So you know which are the assets which are a part of the REIT. There is a quarterly valuation report given by an accredited valuer. And then everything is transparent, compliant with SEBI. So you have your quarterly revenue numbers, update calls, investor calls, and everything that happens. And you can see how the leasing is happening, what is the vacancy rates, how the rentals have been changed. So it's very transparent. So even in the SM REITs, which are the smaller ones, there also SEBI has prescribed all the similar laws to make it transparent. So it has to be, the books, the audited numbers can be seen by everyone.
Okay, as a ballpark figure, what is the appreciation rate?
That is a very interesting question because of COVID in between and because these are all commercial assets, the appreciation has not been as much as you might have wanted. If you see the Embassy REIT listed at 300 rupees a unit, and today, if I'm not mistaken, if it's about 360 or 370 last I checked. So over a 5-year period, 5-year period, the increase is 20%, 25%. The other REITs, I don't think, have fared better than that. But yeah, I mean, you get rental incomes, right? I mean, you get the dividends plus interest plus return of capital. So those numbers would have been in the range of 6 to 7% every year.
Thank you.
Right. Avijit, I have a couple of questions, and taking a lot of investors' interest in mind. One is, if you can just also specify, if somebody is investing into this asset class, what is the kind of time horizon the person should be looking at, or the investor, and how are they taxed here in India?
Time horizon is an interesting one because these are perpetual vehicles and mostly rent generating. As per the regulations, the net rent after all the expenses, I think 90% of that has to be distributed. So that way, you can hold it for perpetuity like a fixed income product. But obviously, there will also be spikes of value. So those can be used for exits from time to time. 5 to 7 years is a good holding period, I think. Or maybe that's for the traditional REITs. For the SM REITs, it could be 3 to 5 years. So one cycle of tenancy, because SM REITs only have one asset. In the traditional REITs, because it's a portfolio, so you can look at a slightly higher number. The second thing is you asked about is tax. Now there are 2 kinds of taxes on REITs. So one is obviously, capital gains when you sell. So that is very much like a equity. So long-term, short-term, very similar. For the distributions that are done, so different REITs have different buckets of distributions. So they distribute it as interest, dividend, and return of capital. So now dividend, depending on the tax regime of the REIT, could be tax-free. Otherwise, everything else is taxed. So they do a TDS, they give you a statement, quarterly statement, and the 26A statements, and it's taxed normally at the marginal rate. You had a question? Yeah, sir.
Yes. You also mentioned return of capital. Is there a different kind of tax treatment covering that?
No. Return of capital, interest, and dividends. If tax exemption is not taken, then all of them get into one bucket and they are taxed at the marginal rate.
And in terms of these fractional ownership, is there a kind of periodic update, monthly or something else, which provides information on the underlying assets?
Yes, I mean, RBI has asked them to give quarterly updates, but since the regulations only got, the gazetted copy came out on the 8th of March, so obviously, I mean, it will come, it has to be, because it's listed on NSE, BSE, the units are listed. So they have to do all their compliances. So I think they will have the similar quarterly valuation reports and cash flow statements and net distributable income and all those statements coming in.
Even with these fractional ownership
yes.
offerings?
Okay. A quick question here. Here.
Sorry.
I would like to know, these are two basic questions. Who is holding the land parcel in this arrangement? Is that the SPV?
Yes. In all kinds of REITs, fractional ownership, tokenization, if the asset is held in an SPV.
Okay.
In the REIT structure, the SPV is owned by a trust. Okay. There is a trustee, there is a manager, there is a sponsor. In the tokenization part, it is in an SPV. Okay. So every time it is in an SPV. Okay.
Just for the safety part of it. Right. The second question I had was, is RERA on registration number a mandate before we facilitate investments in this?
No, because both fractional, see, now the REITs, anyways, REITs and SM REITs, anything which comes under that is SEBI regulated, so you don't need to be RERA regulated. Okay. In case of others, in case of the asset tokenization, which we are working on currently, and the fractional ownership, both of them are completed assets. So you don't need a RERA on a completed asset.
Yeah, correct. I'm talking about the projects which are in pre-launch stage.
If someone comes up with a under construction, then you need a RERA.
That answers.
But right now, I don't think we have much of that product around. At least our tokenization is not for under construction. So anyone who is investing 10,000 rupees to buy 1 square foot, we cannot put him to the risk of completion risk, operations risk, and all that. So that point not required, but going forward, we could have a fractional ownership in under construction.
Okay. And that's more applicable to people who are looking for ownership rather than just investor profits and exit.
No, but I mean, while the regulations are not clear, if you are selling a 10 lakh fraction in an under construction project, okay, even as an intermediary or a wealth manager, for safety's sake, better to have a RERA. Anyways, the license is what, if I'm not mistaken, in KRERA about 25,000 a year. So if you see that is a viable option, your clients are looking for those kinds of investments, diversification, then better to take a RERA.
All right, thank you.
One last question. Anyone? This side.
Yeah.
Hi, just wanted to check, do investors get to pick the asset class when they're investing, which is listed in the platform? Through all DRX?
So we have multiple investment opportunities. So there could be land, which is basically completed, plotted, developed land. There could be rental housing, which is apartments. There could be holiday homes. So you can come and choose the opportunity you want to invest in. You can look at what are the projected numbers. You can look at what are the assets which are underlying assets, and you can take that call. Thank you. Thank you, everyone.
Thank you, Avijit. Thank you once again. With that, let's say thanks to all our esteemed speakers and our participants that's you present here with a round of applause. Keep clapping because we would like to take this opportunity to say thank you to Mudrex, our partner for this event. Everyone for Mudrex, a generous round of applause. Our partner for this event. Thank you. We hope you found this a valuable and insightful session on emerging investment opportunities. Do follow economictimes.com and ETMarkets for all your markets and investment-related news, views, opinions and insights. On that note, I would like to invite everyone who's present here for dinner. Request you to proceed for the dinner and use this opportunity to build connection and network. Have a great and fantastic evening. Thank you all. Thank you.